Hi everyone, I'm Peter Pikalski, and today I will show you a very simple financial model which can help you to test your business idea, to evaluate the payback period, profitability. Our channel is devoted to business planning and financial modeling. You can subscribe, share this video. um, I suppose it will be useful for you, so let's start and I will show you. We have a scratch. It is absolutely empty Excel sheet, so let's start. Here we start with years, months, status. I will make some comments during financial modeling. Well, all inputs will be marked with blue. We will have a 10-year horizon timeline. Your financial model is better be done in monthly detail, because you will be able to see the operational losses during the first month of operating activity. So if you construct your financial model yearly, you won't be able to see these losses, and you won't be able to see the real amount of money you need to start the business. So here are our years, months. Then we're gonna have two status, on and off. Later I will explain you why we need it. So this will be the first input in our model. Now we need to construct our timeline. This will be the first year. So now we are creating the timeline for our project. So we make an automatic timeline, because if we want to restart our project, for example, from the year 2021 to 2022, this can be easily done. We'll name it chronology, for example. Well, what we have to do now, we start with setting up the month and year of our operating activity when we get the first revenue. And now we have to make a table for the inputs for that. Year, month, well, here we specify the year when we start operating activity. It is input, we mark it with blue. Here we specify the month when we start our operating activity. For example, it will be October. So now we have to create a timeline with starting of our operating activity. We make a copy of this. Then operating activity. Let's give it another color. So here we put 1 when we start our operating activity or our business idea. Well, this is if, this is and. So if we enter this formula. The 1 will stand in a month and year when we start our operating activity. Now we have to create an interval when we have these ones to show Excel that our business is working. The operation activity is in place. Well, later I will show you why we need that. So these are the month when our operation activity is on. Then end of investing stage, See that? Now we create reverse of the investment stage. Well, here we've created our investment stage. Here we start the operating activity, and here is the reverse of investment stage. Well, now let's think about our products. The topic of our financial model will be manufacturing of a chair and a table. We have a very simple products. And let's create a table for our products. Okay, let it be here. Products. Product type will be the chair and a table. They are the inputs. We'll mark them with blue as usual. Then we have status button for them. These buttons are also the inputs. I remind you, this is if formula. So later, when our financial model will be done, and we want, for example, to make some scenarios, using this button we can switch on and switch off the revenues and direct costs from chair or table from our calculation, and see the payback period and profitability and other financial efficiency items with or without this or that position. So it's very important for us at this moment to create this possibility. So if we set up on here, then all revenues and all direct costs from chair go to the cash flow statement. If we put here off, then all the revenues and direct costs from chair they don't go to the cash flow statement, and we see the payback period, profitability of our business idea without this income item. So later it will be very vital for you to see the financial efficiency with or without this item. So usually lots of entrepreneurs want to see their business idea with or without this or that revenue item. So your financial model must be ready for such options, for later scenario analysis, sensitivity analysis, and so on. So it's very important to create this possibility right from the start when you start the financial modeling. Now we create a sales plan. We first of all start with creating a sales plan for the first 12 months of operating activity. Here are these months. We'll create the sales plan in month detail system, and we have extrapolation after the 12th month of operating activity. So how it can be done? For example, let's take this color. Here we put our products. Here we set up the year when we start our operating activity. Here we type the month. Here are the months of operating activity. The first month. For you, it's very important to create a sales plan, especially for the first month, because you will be able to see the operational losses, because you will need to finance these operational losses besides the investment plan. And if you create a detailed sales plan for the first period of operating activity, you will be able to see the accurate amount of money you need to finance your business idea. So that's vital for you. And here will be the extrapolation. Extrapolation. So this is E formula. And here we cycle our formula from December to January. Now we close the brackets. Extrapolate the formula. And now we have our automatic months here. Now we have to make our years automatic appearance. If this month is December, then year +1, otherwise we stay the same. Here we see that our year jumped to another one. So here we can so now we have automatic timeline. Everything is changing here, everything is changing here. So now we have automatic sales plan, investment plan. If you want to adjust the time when you start the operating activity, you won't have to retype the inputs, so this will be very valuable for you later when you make lots of scenarios, copies of your financial model. So now let's create a sales plan. For example, in the first month of operating activity, we'll start it in 2021. In October, we have October here. For example, we will manufacture 15 chairs per month, and 25, 35, 50, 80, 150, 200, 250, 300, 400, 500, and 600 and 700 will be extrapolated. Tables. For example, we will make 5 tables the first month, then 10 tables, 12 tables, 30 tables, 40, 50, 70, 90, 120, 150, 200, 300, 350. These are the inputs. We will mark them with blue. So we have a general rule. All our inputs are colored with blue color. Here. Every time we create inputs, we mark them. This will be valuable for you if you later show this financial model to investors, to your partners. For them it will be easy to create their scenarios because they will easily find the inputs. If you won't mark them with a certain color, it will be difficult to understand your financial model. So all inputs have to be marked with a specific color. And here it is in our financial model. So now we have to bring this sales plan to our timeline. What is interesting, we can create some additional table of inputs. Sales plan plus coefficient. Copy formats. We'll have a specific additional column for coefficients. Coefficients for sales plan for chair and a table. The basic value of coefficient will be 100% or 0, for example. This will be the input. Why we need these coefficients? Well, we need these coefficients. For example, we've created a financial model. We see the payback period is too long, and we want to see how we can increase the level of production of, for example, a chair or a table to gain the revenue we want, to get the profit we want, and we can add a coefficient and see the financial efficiency if the sales plan will grow 50%, for example, twice without the adjustment of basic inputs. So this is some kind of scenario analysis that can help you to use minimum of adjustment of financial model to see what is the effective scenario of operating activity, what is the right path to gaining the revenue you want, to gain the profit you want. And you can see if you increase your sales plan twice, is it real or not, or you have to adjust some other parameters of inputs. So such coefficients are valuable for, as usual, for scenario analysis, for stress tests. So when you finish with financial modeling and see the results, such coefficients, such buttons always help an entrepreneur to test what will happen with their business idea, with or without this or that revenue item. Now we add this coefficient here. And what we have now, we can switch off, we can switch it on, increase it, decrease it, and now it's time to move the sales plan to the timeline. Here we take the timeline, sales plan, So what we have to do now, here we have months from operating, the number of months of operating activity that we've created beforehand. Here is this line. And we have to put this sales plan here. Let's do it. This is if formula as usual. So now we extrapolate the formula here. So now we linked our sales plan to the timeline. For example, if we want to move our sales plan to the left, we have it here. If we want to move it to the right, we find it here. So now it is absolutely automatic, and the investment plan is also automatic. So this was sales plan. The next video will be devoted to investment plan. Subscribe, share. Bye.